Hello, I'm Richard Crump, I'm editor of Accountancy Age, and this is the latest Friday afternoon live where we sit in the pub and talk about some of the things that have gone on this week. Hopefully provide a little bit of insight and analysis, although that's a wish rather than a necessity. Two stories I'm going to look at this week is again the rise in audit thresholds. The reason I keep talking about this is you keep reading our articles about it. Stop reading it, I'll stop talking about it. Anyway, the latest bit we've done on this is our kind of audit and standards reporter, Callum Fuller. Kind of spoke to some of the advisors to find out what impacts the rise in audit thresholds could have outside of the standard mantra that people always want to have an audit. What we came up with is a lot of firms could run into compliance and taxation issues as a result of the increase in thresholds. If you have been living under a rock, the increase in thresholds means that most companies in the country, by the very largest, can opt out of having a statutory audit if they so wish. This could raise questions, we found out, around HMRC will deal with that rise, given the assurance and the validation in order to sign off provides for company accounts and reports. Inevitably, there will be companies with many stakeholders that fail to comply with accounting standards and potentially cover up issues in their company accounts or fail to account for them correctly. The knock-on effect is that companies may pay less tax than is due, which may then lead to more tax inquiries when HMRC is already under-resourced. The prospect of a greater number of tax inquiries becomes a distinct possibility in this scenario. Yeah, essentially. So yeah, I kind of ended there pretty abruptly. But the other issue, staying in the world of tax, is it wouldn't be a week of a Friday afternoon live if I didn't have a little pop shot at HMRC. And they had a bit of an epic Wikipedia fail, it seems, this week. Well, it emerged this week when it appears that one review officer used Wikipedia to determine the correct tariff classification of electromagnetic switches. Now this comes out of a tribunal whereby the taxman was chastised over basically using a Wikipedia entry as part of its argument in the tribunal. Now, HMRC decided that certain switches should be classified as push-button switches, a classification that attracts a duty rate of 2.3%. RJS, who were the Bedfordshire-based manufacturer they were arguing with, suggested that they should not be classified as such. They should be classified as electromechanical snap-action switches. Yes, I've not heard of them either. Which have a duty rate of 0%. So, the thing is that HMRC's review decision, the review officer based his decision largely on the definition of electromechanical, which it took from Wikipedia, and said there is little guidance on this type of product and the Wikipedia information is not altogether clear, but all things considered I must uphold the decision. Now RJS clearly challenged this officer's reading of the definition and argued, I think quite fairly, it is very important that someone classifying electronic goods is not just reading some page on the internet, but they have at least a minimal understanding of electronic terms. Maybe this could apply for the Public Accounts Committee. Instead of reading about tax on the internet, they should have at least a working knowledge of the tax system before they try to hold the taxman and other companies, a la Google, to account. But then again, we've all been there and used Wikipedia. I know I have. I'm just honest enough to admit it. So anyway, that's all for this week. I'm sure I'll be back next week and we'll have something equally interesting and illuminating to talk about. I'll see you then.